Hello and welcome to the week ahead in charts. It's week 14. James Kim here, sales trader based in Australia, presenting to you live from Asia Pac. This week we are going to be looking at the US dollar index, levels over the euro dollar. We'll also look at the euro Aussie, followed by the dollar yen. We'll also look at the Aussie yen and an interesting correlation between Aussie yen versus copper. In terms of indices, we'll look at the SPI Futures followed by the S&P 500. And just when the market thought that the US dollar was dead, and as it looked like it was being carried out on stretches, the US dollar bounced hard last week after finding support at the 2016 support trend line, which I've been working with all throughout last year and have presented on this weekly presentation for some time. The 200 daily moving average also played a significant role in defending further losses. Immediate attention today and this week is on the nearby red trend line, which I've marked, and if we stretch the chart back, we can see the important level this horizontal trend line offers given the 2015 rejections here and here. So the first level of resistance to claim is 100.50, and above here we mark the 101 handle for levels to watch for a potential pause in gains. The reversal in the euro was called at the 109 handle and the 200 daily moving average, and the failure for the euro to settle above its 200 DMA against the backdrop of the US dollar index finding support above its 200 DMA was the giveaway that perhaps it was time for the euro to commence a retracement. Now we look for opportunities to turn positive, and our attention this week is on the January-March trend line. So starting at these levels here, we mark support. We can't rule out a false break of this trend line, so 105.70 is our favorite level to line up some bids, with stops to be placed below the February-March swing low. So sell stop if offered at 104.90 would be the trade setup. The retracement should technically terminate here on this trend line, and a rally should initiate aggressive gains. This would reinforce another challenge for the euro towards the 109 handle. The euro Aussie last week found itself failing at the 61.8% retracement level between the January 2016 highs to the February 2016 lows. Now we look for a tactical bounce this week, and we favor these noisy levels here to commence building long positions. And it's interesting to note that the levels that I've just indicated happens to be a 61.8% retracement between the February lows to the recent highs. So the trade setup would be to start building long positions at the 139 handle down to 138.85, with sell stops on all long positions to be placed if offered at 138.60, which is below this swing low here. Should our levels hold, we target the 141 handle to take profits. Now, despite the broad-based US dollar strength which was seen in the dollar index, the Swissy closed at its highs, the euro closed on its knees. If we turn to our focus to the finish seen in the dollar yen, Friday's reversal is peculiar and perhaps signals that the dollar strength included with the rally in risk assets could prove to be short-lived. Starting off with the weekly chart for the dollar yen, we saw the dollar yen kiss and react with immediate force of the 200 weekly moving average. Over to the daily chart, it failed to push beyond a 38.2% retracement between the March highs to the lows, and this gives us a bit of caution in reading the strength over the US dollar. It also gives us a strong signal across the board that we may be entering a period of defense across risk assets. Now, talking about risk assets, if we compare the Aussie yen, if we have a look at the Aussie yen, and this is quite a good gauge of risk assets, we can see the huge reversal that the pair suffered off its highs on broad yen strength. Now what I'm going to do is I'm going to do a price overlay to copper. I'm going to change the chart type to align to minimize the noise. And You can see that the price overlay shows a very close correlation between the two instruments, and I'll also highlight the underperformance in the price of the Aussie yen, which raises the question whether this pair is front-running moves to be seen in copper, which should then lead to moves to follow in equities. This is a chart of the SPI Futures, and you can see the technical pause being offered at the upper channel trend line, and this trend line is a test to break in order for higher moves to follow. 6,000 for our spot index is the target to claim, where we see a great short setup. More on this in the coming weeks. The last chart of the day goes to the S&P 500. I mentioned the significance of the recent 2017 top that came in several weeks back on this presentation, and since then we have seen one set of a lower swing high, and should Friday's highs hold, this would then produce the third lower swing high, which then sets up the index for further falls to first of all test the March 2017 lows here at 2321, with a breach of this level to open up 2300. That's pretty much it for the week ahead in charts. Wishing everyone a profitable and a safe trading week ahead. Thank you.